Good evening, everyone, and welcome. Tonight, we're not just introducing another project, we're actually introducing a revolution in digital finance. The world is shifting fast, from AI to blockchain, and the real value lies in computational power. Luma protocol transformed that power, called hash power, into a new kind of financial asset, accessible to everyone, not just big corporations. Think of it as the new gold or oil of the digital era, the fuel that drives the AI and Web3. In the next few minutes, I will show you how Luma turns hash power into opportunity, how you can be part of it, and why timing is everything. So get ready, because this isn't just a project. This is a movement and the future of DeFi 3.0. Everything of you've seen so is running on the pop chains ecosystem. And you can see here in the middle, you have the pop chain ecosystem, and we start talking about Nivex. Nivex is a centralized crypto exchange started in 2024, offering today a full suite of AI-powered trading tools and financial products. Next up is PopX. It's a Web3 investment fund and incubator that supports promising blockchain projects by providing funding, tech integration, and ecosystem access to a lot of different projects and companies. We also have Pop Social, which is a Web3 community platform powered by AI and where users earn rewards by inviting friends and engaging with the platform. And of course, we have the Pop chain, which is a high performance blockchain powering the Pop ecosystem. It fuels all PopX funded projects using Pop as gas, driving real utility and demand. BETV is a short Web3 short video platform where every clip becomes a verifiable digital asset, allowing creators to mint videos as NFTs. We also have Punkverse, which connects real-world collectibles with Web3 assets, building an active community through NFTs and real-life experiences. Bflow is the next-generation Web3 payment gateway designed to empower merchants and consumers with seamless, secure, and low-fee blockchain transactions. And at the top, we also have the Luma protocol, the DeFi 3.0 platform that transforms hash power into financial assets. Users acquire hash power with POP tokens to mine Luma. This is the currently of pop chain ecosystem where we drive traffic generation through all these companies together. Now, we can all agree on the world is shifting from speculative tokens to real asset-backed blockchain utilities. As mentioned before, hash power has become a global commodity, just like oil and gold. It's all about scarcity and it's limited opportunity to get hold of it. Hash power is actually the engine of Web3. It's powering mining, AI, and decentralized computation. So hash power is very, very important commodity. So what is actually hash power mining? Well, if you look today, you can say think hash power like digital gold mining machines. But instead of owning the hardware, you own the computational share through your wallet. So simple, so powerful. Hash power is computational power that verifies and secures all blockchain networks. So without the hash power mining, it will be very hard to run the blockchain. Traditionally, it's usually large mining farms that dominate this part, but Luma democratizes access to all users. So all us, like you and me, have access to this part. Luma introduced a revolutionary way to convert hash power actually into daily wealth generation. And this is with Luma, users use POP tokens to acquire the hash power, which then mines the Luma tokens. So how does it really work? Okay, I will show you here on a very fund planning way. You have Luma transform hash power into real financial assets. And you can choose to go, if you go in with $10,000, for example, to buy hash power, you have something called 4x. That means 400% minting power. So when you buying hash power with $10,000, you can earn up to $40,000. If you go under 10,000, every time even you put in lesser 2,000, 1,000, whatever, you have 3x and 300% minting power. So just to go, how does it work? You go first in and get a Nivex account, and inside Nivex you can buy POP token with USDT. And then you take your POP token to your wallet, and then you go into Luma, and you can buy hash power inside there. Now here's the fun part of this. This is the first time I ever see something like this. When you go in and buy the hash power, what happens is your funds get split up in two ways. First, 50% goes to an insurance pool. This insurance pool is actually guaranteeing you 50% of your principal. So for example, after 1 week, 3 weeks, or whatever you feel, no, this is not interesting for me, you can actually, with one click or two, convert all this insurance and you get 50% of your funds directly paid out to you. You get 50% of the POP token back to you. The remaining 50% you will have to earn through the hash power mining, but it still gives you a 50% insurance of this part. If you now have earned more, for example, that you have passed 50% of your deposits, that funds, the insurance pool close down and the funds get sent to the liquidity pool where you swap POP and Luma. So what happened here, your mining pool hash rate gets paid out daily to you in Luma. And you claim daily, and the money goes to a yield pool aggregator. The yield pool actually generates more Luma for you. What happens is when people make withdrawal from the yield pool to the balance, there's a 10% withdrawal fee. That withdrawal fee is distributed the following way. 50% is recycled back to the yield pool and pay out dividends to people who still holds their Luma in there. 40% goes to node dividends and 10% go to top 101 rankings. So now you have your funds on your balance. You can then choose to swap your Luma into POP again. What happens when after you swap is that 55% of your Lumas gets burned, taken away, totally burned to zero address. 45% gets back into the liquidity pool. Not only that, also 0.5% burn per day in the liquidity pool of all Lumas. This is why this is very, very interesting. I will show you just a minute. Now, how much can I actually earn here? Well, you can earn between 0.5 up to 0.8% per day on your own hash power mining. But not only that, because of the whole extreme deflationary mechanism Luma has, this will also generate more income for you. How? Well, it's total 210 million Luma tokens to mine. 55% of all Luma tokens gets burned, an additional 0.5 daily burn from the pool, down to 21 million tokens. What happens is when you are mining any token, and there's a deflationary mechanism, makes the price go up because the scarcity amount of the tokens. So in this case, we have seen Luma going from 0.05 at the launch date 1 month ago, and already now up to over 75 cents. So it's going up, up, up. Current state, when I'm doing this recording, I know 10 million tokens already get burned in this mechanism, and we started 1 month ago. You can only imagine how fast it will go. And even if you earn 0.5 to 0.8% per day with the burning mechanism coming in, that makes your price going up, so your Luma gets more valuable. This is the part where it's very interesting. Now, this is where we're talking about the commission and how it works. So when you go in and buying the hash power, your Luma splits into daily rewards into 2 equal parts. So this is the total minting power you have bought. 50% goes to your personal minting power and 50% goes to team minting power. To give you a little bit more explanation, I will tell you like this. This is very complicated calculations maybe, but I will be very, very blunt and say it like personal minting power divided with the total network minting power equal a daily output. The daily output means how many tokens comes out every day from Luma. We can see here on the right bottom, it's around 380,000 to 400,000 Luma per day. So this 50% times the daily output gives you an average of 0.5 to 0.8% daily paid out to you. And again, if you leave it in the pool, it will just accumulate and becomes more and more. And at the same time, the price of Luma get higher and higher. There's also a way for you to build a team and earn even more than 0.5 to 0.8% a day. So here, what you say is sub-community minting power. What does sub-community means? Well, sub-community means part of, say, lesser leg. So how does this work? I will show you here. What we are using here is what's called a binary hybrid system. So for example, a binary means two legs, right? One power leg, one lesser leg. But in this hybrid system means you can have, for example, let's say you have 5 legs. You have one leg with 10,000 investment, 15,000, 15,000, 30,000, and 10,000. What the system doing now is to define which of these legs are your power leg. Well, it's going to be the one with the 30,000. But that means all the rest, 4 legs, is then the lesser team. So it's just one of your legs that does not count, which will become the power leg. The rest counts towards your sub-community minting power. Divided by the total network sub-community minting power times 25% of the daily output. It's very complex, I know, but it is paying out really, really good for you. Now, you also have a rank level system from level 1 up to level 10. And you can see how you reach each one. You have 20,000 in your lesser team. That means you already passed it here, right? Then you have 20,000, you're on level 1. Estimate daily earnings from this part is around $70. As level 2, you have reached 50,000 here, 30, 40, 50. Then you're at level 2. That means you're earning around $150 a day. Now, you also have 25% level earnings. So each level have their own pools with funds coming in here, and you share with everyone else who also are LV1, LV2, and so on, so on. And the higher up you come in the rank, the less people you're sharing with, which becomes more and more money you're receiving here, as you can see. This has nothing to do with personal minting. This is about sub-community and level earnings, how much you earn here. Then the system is also very aggressive, because as level 0 means you don't have anything, you actually have 50% on the daily output from your teams. So actually you're making good money already in the start. But when you're reaching level 1, they have something called a level earning booster. As level 1, you get 2 times 25 times the daily output, which gives you an advantage. When you reach level 2, it goes down a little bit to 1.7 times 25%. Level 3, then it gets down to 1.3. When you reach level 4 and above, then it's just normal 25x daily output. Don't get hooked up with the daily output and the calculation. It's not easy to calculate because it's very complex system, I would say. But we all know that it's working, and we get a lot of good commissions every day. And I hope soon enough we can explain exactly. But everything is like this. When the more and more people join in the community, that means you can earn more faster. The return of investment, the ROI, getting higher and higher the more people joining. So it's a lot of complex incentives in here to actually approach this one. Moving on. Yes, so you can earn 0.5 to 0.8 per day on your own hash power mining. On top of that, you have the yield pool aggregator, and on top of that, you have team earnings, and you also have rank level earnings. But the best part is, of course, the increased price of Luma. All in all, if you combine everything, I would say you can earn everything from 0.5 up to 4% a day if you're combining everything here, depending how your team going and how much the increased price of Luma. So yes, there's a lot of things here that makes sense. Moving on to just to do a quick summary highlights, which I always like to do, is number one thing. There's an insurance pool of 50% of your funding. So if you decide after going with, let's say you go in with 10,000 and you feel after a few, 2 or 3 weeks that, no, I don't want to participate anymore. No matter how much you earn up to that date, you click on the insurance pool, you pay out 50% and so on. And then the remaining 50% of your funding will get coming a little bit longer because of the hash power mining will pay out the remaining to you. But this is the first time I ever hear anything that you have an insurance pool. So that's kind of cool. Number two, the smart yield aggregator. It's compounding interest to maximize returns. The more people that we're drawing, for example, the more funds goes into the yield pool and pay out higher interest on your Lumas that you have there. So this is a very good way to get more Lumas in that way. Deflationary burning, this is the key of everything. With 55% deflationary burning of tokens, reducing the supply very quickly. And transactions means burning, so reinforcing the long-term value of the Luma token. It also have a dual drive mechanism, minting power incentives plus liquidity circulation to stabilize the market. We also have minting power incentives, like joining at any time entitles fair compensation. What does that mean? Well, some people think, oh, I wish I was here from the day one. Then I will get more. No, because of this fair compensation means if you join now, you're still going to have more than the people who joined before because they have longer time. There's a lot of different things in here to make this a really fair game that everyone have an equal chance to earn equal much. And of course, there's a pop-chain empowerment, leveraging the social finance foundation to realize multi-chain application value. All of this is going, we are just 1 month in. And currently, when I'm speaking to you, there's 89,000 members already in 1 month. You can only imagine where we're going to be in the next 3 to 6 to 1 year from now on. And the burning will keep going and the price of Luma will keep going up. So you take the chance and participate in the Luma protocol. So with that, I will say thank you for listening for this very short presentation. Please get back to the person who invited you to join Luma, and we take it from there. I hope to see you very soon. Thank you, and have a good evening.